Happy Wednesday. Hope you're having a great week. We've got some huge news for you today. The housing market has officially shifted into a buyer's market. Mortgage rates are at a 2-month low, and inflation data that's dropping on Friday could be a game changer. Oh, and on top of all that, mortgage bonds have been on fire, breaking through multiple resistance levels. We're seeing some real momentum here. I'm going to break it all down for you, so let's dive right in. For the first time this decade, we're seeing real signs of a buyer's market. Here's what Redfin's latest report tells us. Pending home sales fell 6.3% in January, which is the slowest since April of 2020. Home price growth is slowing. It's only up 4.1% year over year, much more modest than last year. Homes are sitting longer, about 56 days on the market. It's the longest in 4 years. Buyers are negotiating bigger discounts. Homes are selling for about 1.8% under asking price. And contract cancellations hit the highest January level since 2017. Well, what does this mean? It means buyers finally have some leverage. If you've been waiting to get into the market, or you have a buyer that's been waiting to get into the market, this could be your window to negotiate better deals. And to go along with that, mortgage rates, as we said, just hit a 2-month low, thanks to a strong momentum in the bond market. Since the hotter than expected CPI report on February 12th, mortgage bonds have rallied about 109 basis points. Mortgage bonds broke through multiple resistance levels and just closed above a key Fibonacci level. The 10-year Treasury yield dropped from 4.65% to 4.3% with room to go even lower. And if this trend holds, mortgage rates could keep improving. And we're not the only ones hoping for lower rates. Treasury Secretary Scott Bessent just signaled that bringing yields down is a top priority of his. Well, what's his goal? Well, it's restoring confidence in U.S. debt to help control borrowing costs. We also got the new home sales data, and the headline really made it sound worse than it is. New home sales fell 10.5% in January, but December's numbers were revised sharply higher. Median home price jumped to $446,000, but that's mostly because more expensive homes were sold. Housing supply rose to 9 months of inventory, but only 2.1 months worth are move-in ready. So while the sales looked weak, this isn't a market collapse, it's just a seasonal slowdown with higher rates. And with rates dropping, expect sales to pick back up. On the mortgage side, purchase applications were flat week over week, but up 3% year over year. Refinances, those are down 4% this week, but still up 45% from last year. Now, mortgage rates are moving lower, but this week's economic data will be crucial. Tomorrow, we have GDP and pending home sales report, and on Friday, we have the PCE inflation report, which you remember, it's the Fed's key inflation gauge. If PCE comes in lower than expected, the bond rally could continue pushing mortgage rates even lower. But if it's too hot, we could see a pause in this momentum. Also, there's a big wild card tonight, Nvidia's earnings. If their guidance is weak, it could push even more money out of stocks and into bonds, which will help push rates down further. Now, buyers, what does this mean for you? This means that this market shift gives you some negotiating power. Use it wisely. Sellers, you need some realistic pricing to move homes in this market. And agents, rates are improving. Be ready for a pickup in demand. Call those clients that you're working with that were waiting for rates to drop. Now's the time. Well, that's all I got for you today. Thanks for tuning in. Also know that moving forward, I'm going to put these updates out on Wednesdays because most holidays fall on a Monday and that affects banking holidays and makes the week crazier. I figured just moving to a midweek update rather than a beginning of the week update will make more sense moving forward. So expect these videos on Wednesdays now from today on. Please drop a comment below. Do you think rates will keep dropping or will inflation slow the momentum? Let's talk, and I will see you in the next update.